Welcome to GRE. I'm your host, Keith Weinhold. I'll tell you about a chance to meet me in person. Then we're joined by a renowned and legendary investor for his sage-like wisdom on how you should respond to record U.S. debt levels, forecast the future direction of inflation and interest rates, plus a taste of the Singapore real estate market, today on Get Rich Education.
Since 2014, the powerful Get Rich Education podcast has created more passive income for people than nearly any other show in the world. This show teaches you how to earn strong returns from passive real estate investing in the best markets without losing your time being a flipper or landlord. Show host Keith Weinhold writes for both Forbes and Rich Dad Advisors and delivers a new show every week. Since 2014, there's been millions of listener downloads in 188 world nations. He has A-list show guests include top-selling personal finance author Robert Kiyosaki. Get Rich Education can be heard on every podcast platform, plus it has its own dedicated Apple and Android listener phone apps. Build wealth on the go with the Get Rich Education podcast. Sign up now for the Get Rich Education podcast or visit GetRichEducation.com.
You're listening to the show that has created more financial freedom than nearly any show in the world. This is Get Rich Education.
Welcome to GRE, from Sydney, Australia to Sydney, Nova Scotia, Canada, and across 188 nations worldwide. I'm Keith Weinhold, and you're listening to Get Rich Education. Why are values of almost every asset so high? Well, one reason is because we've had that high wave of inflation. When that happens, savvy investors, people just like you, they ensure that money must flow into assets, and that's because you seek a real return above and beyond inflation. If inflation were low, investors wouldn't have to chase yields this way. I've got more on asset values in a moment, but first, on today's guest, legendary investor Jim Rogers, who we'll hear from as a returning guest here soon. In early 2019, so more than 5 years ago, he told us right here on the show that interest rates are going to go much, much, much higher over the next few decades, and that it's going to ruin a lot of people. In fact, let's listen into that. Here it is. This is from Get Rich Education podcast episode 224, which you heard here in January 2019. This is Jim Rogers.
And interest rates are going to go much, much, much higher over the next few decades, and it's going to ruin a lot of people.
And then from there, he went on to tell us at that time, rising interest rates will set in for a long time. And this was back when the Fed funds rate was just half of what it is today, and mortgage rates were 4.5% back there in early 2019. So Jim Rogers made that firm prediction even before we knew about COVID then. And on that episode, we talked about getting your debt and locking it in. And then 2 years later, in 2021, he was back here on the show to warn us to expect high inflation. Well, we sure got that too. And as you listen to Jim Rogers on today's episode, consider that, he just often speaks with this sort of, I suppose, nonchalance that I think can make it easy to dismiss what he says. But don't do that, because countless people have benefited from his guidance for decades, just like I hope that you do today. In the real estate world now, agencies agree that the national year-over-year home price appreciation rate is 6%. That's today, per the FHFA, the NAR, and Case-Shiller. 6% home price appreciation. What about rents today? Single-family rents are up 5% nationally. Multifamily rents up 2.7%. So why are single-family rents growing faster than multifamily rents? Well, it's partly because 2023 saw the biggest surge in new apartment supply since 1987. Yes, that's back when Madonna was the hottest music artist and Reagan met with Gorbachev. But there's less apartment construction this year, so expect a lot of that to get absorbed. available inventory of single-family rentals is going to stay more scarce than apartments for quite some time, but long-term, they both expect to be in really great shape. Residential rental demand is sustainable. Now, back in 2022, available single-family home inventory, that was an astoundingly paltry 1/4 of what was needed. Well, now it's up to half. Some inventory has definitely been added. In fact, I was recently on television being asked about that, but this still means that demand handily exceeds supply. There's not nearly enough housing, especially on the single-family end. And what about those perpetually just around the corner, always constantly just around the corner, Fed interest rate cuts? They keep getting delayed beyond a lot of people's expectations. Well, per the CME's FedWatch tool, here's the chance given of when the first rate cut will occur by the end of July, 10%, September, 64%, November, 77%, December, 93%. Personally, I think the chances are lower than all of those. Currently, inflation's at 3.3%. But here's the thing. Even when it hits the Fed's target of 2%, that doesn't mean that rates must be cut. All right, that's a reality that a lot of people seem to forget. Now, here on the show, not after every quarter, but sometimes when a quarter ends, just like one did a week ago, we take a quick look at other asset class moves outside of real estate in order to get a relative perspective, some comparison here. If you're listening to this episode 10 years from now, this is really going to help mark this era for you too, as we do have many listeners that listen to every single episode. The 30-year mortgage rate is near 7%. Now, all these next figures are year-to-date through the first half of the year. So this is just the performance of the first half. Stocks have soared. The S&P is up 15%. One way that U.S. stocks changed last quarter is that trades are now going to settle faster. Investors will see their purchases and sales finalized in just one day instead of two. Gold is up 13% to over $2,300. Bitcoin up 44%. Oil up 16% to $82. And again, that's performance for just the first half of this year. The world's three largest companies, Apple, Microsoft, and NVIDIA, have a combined value of over $9 trillion. Now, a company's total value is known as its market cap, and that is simply found by multiplying share price and shares outstanding. By comparison, all the gold in the world is worth $15 trillion. Hey, if you're familiar with an event called FreedomFest, I have some cool news for you. It's an annual conference that, how would I describe it? Well, I haven't attended it before, but there you can learn to expect more about free thinking and ideas about the size of government. Well, it starts in 2 days. It's July 10th to 13th in Las Vegas. You can meet one of GRE's investment coaches in person there, and you can also meet me. Yes, we'll both be there. If you see us, be sure to say hi. We'd both like to meet you. Hashtag IRL in real life. Some of the Freedom Fest speakers include our frequent GRE guest, Robert Kiyosaki, as well as some other guests that you've heard with me here on the show. Also, Steve Forbes, Ice-T, the comedian Rob Schneider, Nevada Governor Joe Lombardo, Whole Foods founder John Mackey, and the congressman that wants to end the Fed, Thomas Massie, and more. They're all speaking, so yes, not a lot of notice, but if you're going, it's a way to meet me in real life, perhaps just in a casual way, in 2 days at Freedom Fest. Well, it is public information that the net worth of this week's guest is $300 million. He's been influential for a long time. Let's talk to legendary investor Jim Rogers. This week's guest needs little introduction. He is a legendary business and investing mogul of our time. He's a Yale-educated, prolific author. He co-founded the Quantum Fund, and he even has his own commodities index and ETF. He's also a prolific traveler. He wrote a very well-known book about his world travels, visiting some 116 nations. Hey, welcome back to GRE. It's Jim Rogers.
I'm delighted to be here, Keith. Let's get rich. I need to get rich. I want to get rich.
Hey, well, your guidance helps us do that. That's why you're here. And Jim is joining us remotely from his home nation city of Singapore today. And it's always interesting syncing up our times of day here. Jim, where to begin? You've been with us here. I think this is the fourth time you're here in about the last 5 years. And we're at a time when asset prices of seemingly everything are near their all-time highs, maybe even in their inflation-adjusted all-time highs in some cases. What are your thoughts with asset price levels?
Keith, it's very perceptive of you and insightful. Yes, this is one of the few times in world history that I know about where nearly everything is making new highs. I think China is probably the only country that's not making new highs, but nearly everything else is. Now, it's wonderful. It's great. A lot of people are having a lot of fun. But unfortunately, I've been around long enough to know that when things get this good, when everybody's having so much fun, we're getting closer to the end. I am not selling short or anything yet, but I see the signs that this is going to come to an end, as it always does, and it's going to be a mess. And the reason it's going to be a big mess this time, you remember what happened in 2008 because of too much debt? Since 2009, the debt everywhere has skyrocketed. I mean, even China has a lot of debt now. China bailed us out before, but everybody has a lot of debt now. Maybe not North Korea, but everybody else does.
And that sure includes us. I mean, we have these asset prices at all-time highs. Yeah, here we are still the largest debtor nation in the history of the world in the United States, now at $35 trillion. And we're spending dollars on others' wars, something that we couldn't say when you and I talked a few years ago. The biggest line item of our national budget anymore is about $1 trillion in annual interest payments alone. And Jim, we're really on this course now where soon the U.S.'s annual tax receipts won't even cover the interest payments on our debt, and we may have to borrow just to pay the interest. So where do we reach the breaking point here with this world in debt led by the United States?
You make some very good points. Unfortunately, I wish you didn't. I wish you couldn't make those points, but
right.
It's simple arithmetic. Just look at the numbers, and the numbers you cite are just what they admit, what they acknowledge. There's a lot of off-balance sheet debt that they don't even talk about. I mean, the numbers, if you try to get out a pencil and a piece of paper, you will realize that America can never pay this debt, never. Countries that have gotten into this situation in the past have had big problems. Now, it's a good time to be an old American. I don't have to worry about all this for too many years. But I have young children. Oh, my gosh. The problems that their country is going to face in their lifetime are staggering. You look back at previous countries that have done this kind of thing. In the 100 years ago, Britain was the richest, most powerful country in the world. 50 years later, it was bankrupt. IMF had to fly to London and pay their bills. It wasn't fun. It was terrible what Britain went through. But other countries have done the same thing. Maybe we don't like what I'm saying or what's happening, but just read the history and you will see how it winds up. I certainly don't like it, but I have to deal with facts. If I don't deal with facts, I'll go bankrupt too, which I don't want to do.
Yeah, sometimes let's laugh to keep from crying, right? When you talk about how certain government figures are just what the government is willing to admit to, I think that's the right lens to look through when you look at any government figures. Well, at least that's the part that they're willing to admit to. It's interesting that they're willing to admit to this. It's interesting that they're willing to admit to 9% inflation like we peaked at 2 years ago. But when you talk about the future and this huge debt load and children or grandchildren, could austerity be part of it? Something that's very politically unpopular, but if we lived in an austere state, wouldn't that really be sort of like the downfall of the American empire at that point?
Well, that's what happened to the British, as I said. 100 years ago, they were the richest, most powerful country in the world. There was no number two then. 50 years later, completely bankrupt. I happened to be in England during part of that time, and it was a mess. It was wretched. So I don't like saying any of this, but I have to deal with the reality. And the numbers you cite are what they admit. The numbers are much worse. I don't know if anybody in Washington really knows. I don't even know if they care enough to check to see how bad things are. Because every time someone from Washington, a politician or a bureaucrat says something, they say, don't worry, everything's okay. We have Janet Yellen, who's the Secretary of the Treasury, a year or two ago said, don't worry, we have everything under control.
Reassuring, isn't it? Not really.
Oh my gosh, she's got a couple of fancy Ivy League degrees. But she still says, don't worry, it's okay. Well, I worry. I'm probably not as smart as she is, but I worry.
Well, it's interesting that you bring up the fact about the things that we don't know. And these numbers, these debt levels, and even the deficit gets so big, we're just throwing around this word trillion anymore. For some perspective, I happen to know that 1 trillion seconds is 31,700 years. In order to help put this into perspective, well, 31,700 years ago, that's just about as far back as when the plains of Europe were being roamed by neanderthals. That's 1 trillion seconds ago. And again, we are $35 trillion in debt, and we have a deficit of at least $1 trillion, the annual thing.
I'm glad you're putting some perspective on this, but I don't need it. I know it's a staggering, whatever number you want to look at, whether it's the one they report or the one that they hide, whatever it is. I know, because I can add and subtract, I know that America has a gigantic problem that is going to end up like every other country that's done this sort of thing. It's going to end up badly. America's going to lose its status, not this month, don't worry. July is okay. But no, I can read, I can add, I can subtract. I know how it's going to wind up. It's not good for young Americans.
I mean, we think of the fall of the Roman Empire. You bring up the UK. The UK is still part of the G7, but they're no longer the one predominant power in the world. Jim, when I look at history and I think about sort of the powers that be and how they create and debase the currency and how those problems percolate into so many parts of the society, I think of the United States as basically they have a monopoly on creating currency, and I just wonder if that's part of the problem. Lennar builds houses, but they have competition from KB Homes. John Deere makes tractors, and they have competition from New Holland. Heinz makes ketchup, and they have competition from Hunt's. See, when there's competition, there's sort of this incentive to produce quality and provide others with value. But since the U.S. has no substantial competition to the dollar, I wonder if we can think of this as a de facto monopoly. From its dilution of the purchasing power of the dollar, its quality is suffering because the dollar doesn't have any substantial competition. So I guess what I'm leading up to and what I'm getting at is we think about currency creation as a de facto U.S. monopoly. I mean, does the government have to be the exclusive money printer where all this just ends up in the debt column here?
You'll raise some very good points. But back to the main point. The main point is there is no way that America can ever pay these debts except by default, which is one horrible way, or by printing gigantic amounts of money, which is another horrible way. This is not the first time countries have done this. If you just go back and look, it has never ended well. Never ended well. Yes, England is still there, but nobody thinks about England the way they did 100 years ago, and nobody in England lives like they did 100 years ago, and many people left. I don't know what's going to happen to the U.S., except I know it's not going to end well, because I can add, and you can add and subtract. I wish we could subtract. There's nothing to subtract because the debt just keeps higher and higher and higher. And the numbers are very simple. If you get out the amount of debt we have and see the possible income, it just doesn't work. If you have fifth grade education, fifth grade arithmetic, you know it doesn't work.
Jim, I don't know if you remember this, but the first time you were with us, it was January of 2019. That was more than 5 years ago. And at that time, you said interest rates are going to go much, much, much higher. That was your direct quote, 3 muches. And you said that it's going to ruin a lot of people. And here we are with a lot of people ruined in the commercial real estate world and the apartment syndication world and so on. So if you continue to think there's going to be more currency creation to make it easier to pay back our debt, does that mean you believe that higher interest rates and higher inflation are going to be a persistent condition, say, just till the end of this decade, which is about another 5 years? What do you think about inflation and interest rates for these next 5 years?
I know that in Washington, they will print money. That's all they know. They want to keep their jobs. Keith, they don't care about you. They don't care about any of us. They care about keeping their job, and they will do whatever they have to keep their job the easy way. Now, the proper way, of course, is to buckle up, buckle down, and start doing something about the horrendous situation we're in. They don't care. They think they'll be gone by the time those times come, if they're ever coming. And they will say, but we're America. We cannot have problems like that. Well, that's what the British said too, once upon a time. And as I say, there was no number 2 to the British. They were that powerful. They were that much on top. It's not that I don't like saying it. I don't like thinking it. I don't like living with it. But I do hope I can prepare so that I don't go down the tubes like some other people will. But I mean, just do the arithmetic. It's very simple. The numbers just cannot work. I didn't say the numbers do not work. I said they cannot work because the situation is that dire. They can hold it off for a while by printing money. Great for them, not for you and me. Certainly not for our children.
I think that's all they're going to keep doing. That's the most expedient way to do it, to keep printing. Any politician that proposes austerity and you having soup for breakfast, lunch, and dinner is not very likely to get reelected. Does that mean in the next 5 years you foresee historically elevated interest rates and inflation, which is basically where we actually still are now?
Well, of course I do. I mean, there's the market. The problem is right now the central banks still think they're in control, and they pretty much are. But there will come a time, and there always has in history, when the market says, wait a minute, we know you're lying. We know this cannot work. And then when the market takes over and the market starts setting interest rates and other conditions, that's called a disaster. That's a real serious problem, because the market will know how bad things are. And the Treasury Secretary can sit there and say all day long, don't worry, we have it under control. And the markets will say, thanks, but we know better.
Well, we've got more coming up with Jim, including he spent some 60 plus years abroad. I want to learn more about what he thinks with living and traveling so much about the United States. If you listen to Get Rich Education, our guest is legendary investor Jim Rogers. More when we come back. I'm your host, Keith Weinhold. Your bank is getting rich off of you. The national average bank account pays less than 1% on your savings. If your money isn't making 4%, you're losing your hard-earned cash to inflation. Let the liquidity fund help you put your money to work with minimum risk. Your cash generates up to an 8% return with compound interest year in and year out instead of earning less than 1% sitting in your bank account. The minimum investment is just $25K. You keep getting paid until you decide you want your money back. Their decade-plus track record proves they've always paid their investors 100% in full and on time. And I would know because I'm an investor too. Earn 8%. Hundreds of others are. Text FAMILY to 66866. Learn more about Freedom Family Investments Liquidity Fund on your journey to financial freedom through passive income. Text FAMILY to 66866. For a lender that's a specific expert with income property, you need Ridge Lending Group, NMLS 42056. In GRE history, from beginners to veterans, they provided our listeners with more mortgages than anyone. It's where I get my own loans for single-family rentals up to 4plexes. Start your pre-qualification and chat with President Chaley Ridge personally. They'll even customize a plan tailored to you for growing your portfolio, start at ridgelendinggroup.com, ridgelendinggroup.com.
This is the Real Wealth Network's Kathy Fettke, and you are listening to the always valuable Get Rich Education with Keith Weinhold.
Welcome back to Get Rich Education. We're talking with investing mogul, legendary Jim Rogers. He's joining us from Singapore today. He's joined us a few times over the past 5 years, and with what he said in What's Coming, he's really been remarkably accurate. Sometimes he just gives a pretty casual delivery, but you really want to listen in to what he's saying. A lot of people have hung on his every word for decades here. And Jim, part of that is all your worldly experience from so many of your travels and visiting over 100 nations. I've only visited about 35 so far myself. What do you think that we can learn about the United States from living and traveling abroad?
First of all, I hasten to tell you I have made many mistakes in my life. So don't think I don't know how to get things wrong. I have many times. But yes, living abroad, or certainly even traveling abroad, is an eye-opening experience. It's a fabulous education. Rudyard Kipling, who won the Nobel Prize for Literature once, had a line in a poem. The name of the poem was The English Flag, and the line was, "What can he know of England who only England knows?" Point is, you'll know a lot about your own country if you know about the rest of the world. And you will. If you go to country X and you see they eat different food or wear different clothes, it'll make you realize a lot about America. So my point is, it's a fabulous education to see other places. I don't know if it's helped me. In my view, it has helped me a lot to understand the world and to understand other people.
Now, in my international travels, which are a fraction of yours, a lot of times I get a reminder that life in the United States is still pretty clean and efficient. We have an abundance of potable water, all the way to an amenity like fast Wi-Fi. And you know, if someone abroad is traveling in the United States, they get to experience those things. They probably don't even realize or understand that we're the greatest debtor nation in the history of the world. It's actually pretty difficult to know.
There are signs that even those travelers will see. If you go to JFK Airport, you will see the huge difference in JFK and, say, the Japanese Narita Airport. You know you're in two different worlds when you visit some international airports outside of the U.S. But it's not just that. America five-star hotels do not compare with five-star hotels in other countries. And listen, I don't like any of this because I have to live it. But the facts are, yes, and you make a very good point, that most people do not notice or does not affect them much at all, if it affects them at all. But that just makes the eventual problem worse because it hits us out of the blue and we don't know what happened. At least if we're worried, we can prepare. But, you know, if you ride down the highway, most people think everything's, it's okay. This is a nice interstate. Until they hit a pothole, they think everything is great. I hope that this all changes. I hope I'm wrong, but I have seen enough to know that it's not going to end well.
Tell us about where you've lived for a long time. I mean, you come from the United States, but you've lived abroad for a long time. You've been there in Singapore for a while. Singapore, which is a place I haven't traveled to, has a reputation for being prosperous and enterprising in a really clean place. So why don't you tell us a little bit more about why Singapore is prosperous, including what its real estate market's like?
Singapore is a tiny country. There are only 5 or 6 million people here. So yes, it has been a remarkable success story. It's probably been one of the greatest success stories in the world in the past 40 or 50 years. It still amazes me to see how efficient and how well everything works here. And they don't have yet, they're getting debt now, but they don't have the staggering debts that some other countries do. I mean, Japan, America, you look at some of the great success stories that come to people's minds. Japan did it by borrowing staggering amounts of money. Every day, the Bank of Japan borrows huge amounts of money. It's going to have a problem too someday. I mean, it's just very simple. I don't want to sit here and sound like some crazy fearmonger, but I can read, and I know how this is always wound up. Now, there's some very exciting and successful places in the world. And if you go to some parts of the United States, you say, oh my gosh, what a wonderful place. And it is. But underneath, it seems to me that there are problems developing. If you come to Singapore, you'll say, oh my gosh. And I'm not the only one who knows it. All the international surveys show that Singapore is one of the very top.
Now, in Singapore, is it more of an owner society where most of the residents own the home they live in? Or like you find in a lot of urban areas, is there a disproportionately high amount of renters there in Singapore?
Over 80% of the people in Singapore own their own home.
Huh.
The guy who set out to build Singapore knew, and he especially, because in his lifetime there'd been a lot of riots in Asia, and he somehow knew that if people own their own home, they had a huge stake in the country. And
right.
They had a reason to try to make sure everything went well. So in this country, over 80% of the people own their own home. Yeah, they may have a mortgage, but still, they own their own home. That's part of the reason for the success. I mean, for what it's worth, I'll also tell you, he was a huge believer in education. He made sure that everybody spoke at least 2 languages. I mean, he knew what it took to be successful, and he did it.
Yeah, homeownership is generally good for communities like you touched on. You just have more of a stake in making sure your neighborhood stays quiet, or you might show more interest and enthusiasm in new, clean mass transit coming into your area. You're more likely to be a voter when you own your home, and so on. So sure, that gives the residents a more vested stake in their own community, which is good for everybody. Does Singapore have one problem that we have here with the United States housing? Do you have any idea if there's a substantial housing shortage there in Singapore like we're seeing in so many places, Jim?
Not shortage in the sense that you probably mean it. Yes, at times prices go high because there's not an abundance of housing, and people keep moving to Singapore because it has been a successful place. So no, it's not like many places that we both know, but there are more immigrants coming here. The population is rising, and they got to live somewhere. Yes, people are building homes, and so it's not a gigantic problem at the moment. Can it be? Yes, of course it can be, and maybe it will be someday, but not at the moment. One thing I'll quickly say, many societies, many countries have a saying that families go from rags to rags in 3 generations, and there are many reasons for that, some social reasons. I will point out that Singapore is now on its 4th new government, so maybe if human wisdom is correct, maybe Singapore is going to have some problems in the future. You don't see them now. They might, though.
Well, that's an interesting way to think about it. We've talked about problems in a few nations. Jim, I wonder, do you see there being a bright next up-and-coming nation? Because you have this relative perspective from all your travels.
There are places that are trying to change and do better. Vietnam is a perfect example. I mean, what a nightmare it was 40 or 50 years ago.
Right.
Now it's on the rise. South Korea is one of the most successful, prosperous nations in the world. And in 1970, North Korea was richer than South Korea. That, of course, is not true anymore. So countries can change and can develop, and it has worked. I'm interested in Uzbekistan now, in Central Asia. It was ruined by the communists. 500 or 600 years ago, Uzbekistan conquered a lot of the world. I mean, then the communists came along and ruined it, but now they're changing again. So there's always somebody on the rise and always somebody on the decline. It's key, of course, is to be in the place where things are getting better, not getting worse.
With that in mind, as we're about to wrap up here, Jim, I'd like an actionable takeaway for the audience. And before I ask you that, if I can share with you what we do here in a nation and a world of expanding debt. GRE's take on debt here is the way that we can borrow large amounts prudently and get our own debt is to buy income-producing real estate. If you borrow more, you can own and control more, and both inflation and tenants passively debase your mortgage debt for you, which enriches that borrower as long as they can control their cash flow. So really, that's one thing that we're doing to play things here in a world of inflation. What are your thoughts with that? Or if you think that there's something else that the everyday person can really do to protect themselves in the future?
It's pretty clear that there have been, if you understand debt and if you manage it properly, oh my gosh, you can become unbelievably successful and unbelievably rich. The proper words are, though, if you handle it properly. History also shows that many people have been ruined by debt. So I hope that everybody understands that debt is not as simple as it looks, but if you handle it properly, oh my gosh, the returns and the rewards are huge. And yes, there are many throughout history, throughout the world. Many people have made gigantic fortunes from property, from real estate. So I hope you're doing it right. I hope all of your viewers are doing it right. It's not as easy as it looks, but it can lead to great success and great disaster. So yes, don't stop. Make sure that everybody understands the potential problems and the potential rewards, and they don't get overextended. Oh my gosh, you'll be very, very rich.
Yeah, debt's a little bit like fire. If used inappropriately, could burn down your house, but if you know how to use fire, you can cook meals for the rest of your life. You have any last thoughts overall? Anything you'd like to share? Anything we really ought to know?
I will tell you again that before this is over, interest rates in the U.S. are going to go much, much higher. The debt is staggering. It is just, whenever I look at the numbers and think about them, it shocks me, stuns me, because I know it's going to lead to huge, huge, huge problems. But the people who are aware and understand what's happening can thrive. So this is not some kind of disaster for everybody, but some people will do extremely well. I hope that everybody you know does extremely well.
Well, Jim Rogers, it's been a pleasure hearing from you again. As always, thanks so much for coming on the show.
My pleasure. I hope we can do it again sometime.
Oh yes, it's good to get the bigger picture, sage-like wisdom. I'm not sure if you caught it early in the interview, but Jim is not selling short. That means he's not betting that stocks are about to take a big fall. He expects even higher interest rates. When it comes to America's swelling debt, most agree that they're just going to keep inflating their way out of it rather than default on it. I do too, but consider that the U.S. actually does have a history of defaulting, like in 1971, when we told the world that you can no longer redeem our debt IOUs for your gold. That there was defaulting on a promise. We weren't going to give them the gold anymore. Singapore is still growing fast. In fact, it's averaged about 2% annual growth over the last decade. If you discard pandemic aberrations, the value of the median Singapore condo is $1.7 million, and it is 1,000 square feet in size. That sort of makes you think about New York City real estate. And in fact, I had a trip planned to Singapore in February 2020. It was a cruise, but I didn't go. That part of the itinerary got canceled. If you remember, COVID heated up in Southeast Asia early on, so I ended up spending more of that trip in India and Dubai, as it turned out. With our accelerated expansion of the supply of dollars that have been created since 2020, here's one result. Today, more than 43% of Americans have been forced to cut back over the past year, and nearly 20% have had to borrow from family or friends in order to make ends meet. And, when politicians brag about government funding, just remember this. They're actually expecting you to give them credit for spending your money. That's what that means. And unfortunately, no one is immune from Congress's spending, which can be reckless at times. If you don't pay for something with taxes, then you pay for it with inflation. And that's exactly the type of issue that we expect to study on at FreedomFest, where I might be fortunate enough to meet you in 2 days. Big thanks to the iconic Jim Rogers today. His website is jimrogers.com. Coming up on the show here in future episodes soon, we're going to discuss a few components that add value to your residential real estate that really don't get discussed very often. Garages, and also the vacant land that your property sits on. Also, the king of commercial real estate is set to make his Get Rich Education debut. We'll learn about commercial real estate's turmoil and the commercial sectors that higher interest rates have blown up. Well, hey, do you have family or friends that are into investing or real estate? I love it when you hit the share button on your podcatching device or whatever platform you're listening on. Everything that we do here is free, and the share button really helps the show. And be sure to follow or subscribe to the Get Rich Education podcast yourself if you haven't already. Until next week, I'm your host, Keith Weinhold. Don't quit your daydream.
Nothing on this show should be considered specific, personal, or professional advice. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Get Rich Education, LLC exclusively.
The preceding program was brought to you by your home for wealth building, GetRichEducation.com.